The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
And this is Dave White sitting in for the one and only Steve. And it's going to be rather interesting. Sitting in, I used to do 9 a.m. in the morning when the market was starting. And back to my old hour, at least for today. I don't know what's happening. I emailed Steve and asked him when he was coming back. We need him. And my dogs wanted to get walked this morning. They're not going to get walked now until after the show. And the trading dogs, both Miss Vixen and El Diablo, were none too happy with it. I can tell you they voiced their pleasure with a liquid stream of justice. So I am going to have to clean something up now. Anyway, they are taken care of and banished to a nice comfy bed during this show. But we will move on. And what else can we do? Of course, we were up a little higher, up to 1986. I said in my newsletter this morning that it would be extremely tough for this market to stay higher, and there was a big reason for that, and that was KBH Homes coming out with earnings not too good. Just had some housing data come out, and they're saying that new home sales are up 16%, but doesn't seem to have changed the outlook of these stocks. I think this little data point today at 10 o'clock may just be a harbinger of the last hurrah, because they're all guiding down. Now, when we look at the way that these are trading, KBH is off 6.5%, let's call it. We've also got some of the other ones, HOV off almost 1%, MDC almost off 1%, DH Horton DHI off half, 0.6%, Lennar off 57%, and I think Lennar itself had a little problem. Let's take a look at Lennar chart real quick. Yeah, I mean, all these housing stocks pretty much guiding down. And when you start looking 6 to 9 months out, as the market often does, you start seeing it. And whether we start seeing higher interest rates and a more hawkish Fed the day after the elections or the day after the first of the year, we need to be looking 6 or 9 months ahead, and I think the market has decided to go ahead and do that, especially when we look at indicators like the summation index, which is an oscillator of advancing and declining stocks. The majority the indexes will eventually go to where the majority of the stocks are going, but we'll have all kinds of issues. And, Apple, I've been kind of talking about it since Friday on the Tom O'Brien show, and I guess my show too at the 2 o'clock hour. That is how poorly most of these stocks in the Apple Echo stream for parts and components have been doing. It looked like it was a sell the news kind of river. We've got Apple off a buck already on 10 million shares. There's some kind of article about flexing them if they're in your pocket, and they may snap or snap components in it. And maybe one of these things that Apple never tested. My guess is they did. Maybe someone ignored it, or they didn't do the test correctly. But it is what it is, and that I think a little damper on Apple today. It pretty much single-handedly tried to keep the NASDAQ up yesterday. Not any such luck today. It's off a buck and a half, so no big deal. But they've been throwing just about everything they can at the NASDAQ here. in the last week or so to keep it up for the Alibaba IPO. Yesterday on my show, we also talked about the second biggest IPO of the year, trying to be pushed out this week. I thought that maybe we were going to see some continuing sales to start raising cash for that too. Will the dollar peak out? We blew through this. So the next stop's about 88 on the dollar index. We basically have blown through now the upper range of that. And, of course, there's nothing like giant moves in currency markets to really get the other part of this business going, which is the equity markets. I think it was on Friday's show or Monday's show, my memory is really starting to go. We brought up the press release from the SEC about the biggest award ever for a whistleblower. They are going to pay that whistleblower $30 million. And it sounds like a lot, but if you're making $5 or $10 million a year, are you going to rat somebody out because you know you're never going to get another job in the industry at that level yet again? You're going to be a pariah. So they have to make it worth these people bailing out and exiting stage left. And they announced it. But one thing they didn't announce was the whole issue with who did the $300 million fraud. Now, last night at about 10 o'clock, it crossed the wires that Bill Gross at PIMCO is under investigation for maybe inflating the value of some stocks that he bought himself and then traded yet to another fund. This would not be the first occurrence. It was rather standard operating procedure around 2000 to find out earnings on a stock had boosted at 10 or 15 bucks after hours. And, of course, they would retroactively sell shares and say that they sold them during the day back to an account within the firm themselves. There's always been we're not in a business with a bunch of people that are taking a vow of poverty, moving to India to work with the most desperate among us. These are people there for cash, and of course it is sometimes too big a temptation to resist, and they resort to illegal matters. But what we've seen now is maybe the best explanation that I can hallucinate, since I have no inside information. But I would say that since PIMCO is the biggest bond fund, Bill Gross has been losing a lot of business that is exited when he started exhibiting, I would say, behavior not becoming of a sane individual. Let's put it that way. He lost his second in command, L. Arian, and this would explain a great deal of his behavior if it is true. It came across the wires about 10 p.m. last night. Now, we would pretty much expect to see the bond market really move if it was true, or if anybody thought. But it also may have been a rumor floated around at the close yesterday when we started seeing the massive amount of ES contracts being pumped out in the last few minutes of the day, pushing the S&P cash down. So we've got a lot of moving parts out here, a lot of things besides just world events, political events. We have and could have a bond event, and I think for bond watchers out there, they should be watching it extremely closely. Like I said, I have no knowledge of it, but if I can put two and two together, I suspect other people also will, and you can get a run on a bond fund like PIMCO and create all kinds of problems, even if Mr. PIMCO himself has done absolutely nothing wrong. So, yeah, there's all kinds of ways, but it seems I've got a question here. Why don't they pay big money for government whistleblowers? I think it is starting to come up, but they also can't be fired too. so they have their job protection. It's not like they can't go get it. They can't stay working for the government if they blow the whistle. Most of the time they're forced out, in which case they bring a lawsuit and get a bunch of cash later. The SEC issue is much harder because you can't force some company to pay some guy that blew the whistle on them. So I think on the government, they just continue to work for the government, maybe in a different sector. But awful hard to fire somebody in the government. That's just not something that unions allow to happen. Anyway, we were looking at Lennar. Let's take a quick look at KBH since all of these are out here. Of course, KBH had earnings out this morning. I didn't go through it other than the fact that it is down. And we'll look at a few more stocks that are going to be having earnings and did have earnings throughout the show today. We've got plenty of time here as I just start to warm up in the morning, but certainly you have all the volume you already want in KBH Homes to break the previous low from May 15th that had 4.3 million shares. We already got 4. That's going to be everything you need to look at. And if you break that, you also have 1296, which is the November 15th, 2012 low. And if you break that, you're back down to $6.28 on the June 4th, 2012 low. So we could see some fairly steep retracements in this housing industry as I think we get used to what is going to look like higher interest rates in the near future and a market that seems to be somewhat saturated, at least for new homes. You would think that this market, especially with the up 16%, would vastly change the fortune of these stocks, but they are not reacting whatsoever, and that's telling me that news is probably somewhat bogus. Still off 6.5% on KBH. Ryland Homes off a 1 6/10. Let's take a look at Ryland real quick because it's going to be incredibly hard for this market to go higher if we don't have housing stocks doing better. So we will continue to keep an eye on that. What else do I have here? Okay. We were looking at Ryland. Okay, you got a high volume low on Ryland, $31.22, 4.1 million shares, so pretty good chance you're going to see that tested. Rather toot sweet. What is that? That's going to give you about another $2.25 down to find the spike, or at least we're kind of on the top of that high volume low already from July 31st. Let's take a look at HOV real quick. Look a little closer. Well, this one's coming down, and of course, big volume yesterday. 2 days ago, 4.8 million shares. So we are into the candle of the August 5th low on that one with 3.9 million shares. So we'll see. We're down to it at least today. You've already hit that 375 low. So we will keep an eye on this one. Bounced a little off of it, but keep an eye. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we are back, you can give me a call at 877-927-6648 and ask about a stock if you would like. You can also call me, you can also email me at path@tfnn.com and or post a message in the den as Rob has and wants to look at ERY. And that's the Direction Energy Bear 3X shares. We certainly got fairly decent volume today. I'm going to assume that we're going to break the 600,000 shares that we saw on August 7th. And that will open up the next level. You've got a high volume down day here that's going to be the resistance level. That's from April 15th with a just over 1 million shares. It gapped down after that day on 694,000 shares. My guess is if I was long this thing already, I'd want to be putting an order in to sell at about 1740, 1725. And take my bread off the table because I think you're going to see it then probably trapped in a lower trading range from about $15 up to that 1720, 1750 range as crude probably goes to about 87, 87 and a half. And my guess is that we're going to stay in a lower trading range in crude, probably from about 87 and a half to 93 or 4 over a few months, and then probably break down even further. it looks like almost all these commodities are ready to go to the cost of production. If anybody has spent a lot of time around TFNN, pretty old adage is basically prices will go to the moon. They are unsustainable, and of course the best cure for a high is high prices. More people will come on with supply, and then of course the commodity price will probably crash somewhat. My guess is that we've got so much crude, he called it a tsunami of crude coming, that we're going to at least have that, but we're probably going to see some of the high-cost producers start cutting off here in the next few weeks, and that's going to start that lower trading range from about 87.5 to 92, 93, something like that. I think we're probably going to go around there for a while and gain some strength to go down there and bust down probably through 80 or 78, whatever the cost of production is. I haven't looked into it too hard lately, but I think that's probably going to be where the cheap oil gets turned off totally. And that should set a low in there for some time on crude. So hopefully that answers your answer, Rob, but I'd be saying that you've got a good chance to hit 1740, 17 and a quarter out of this thing, and you got some heavy resistance, so it's probably going to have to slug through that. What else do we have? Oh, well, we were looking at the housing stocks. We've got the president speaking right now, I think, in front of the UN, and it's always wondering if he's going to say something that'll spook the market. But I think the market was a little bit spooked already to speak of. I look at the volume from the New York Consolidated Tape. That is the Amex all floor traded stocks at the New York Stock Exchange, plus any of the stocks listed on the Amex or the New York Stock Exchange that are traded on ECNs. That's off the floor, but still legally traded. And I look at that volume. Generally, you get 3.3 billion shares at the end of the day, totally, where you've already got about 600,000, which is kind of a little bit light out here. Of course, we started to try to pop up. We tried to pop down. We're off about 1 point on the S&P cash, and we've got about 364 million shares already in the NASDAQ. So not a lot happening so far. I think at this point we're starting to really look at whether or not this market can crack before we have fund buying come back in once again. Of course, that is the last couple of days of the month plus the first 3 days of the next month. So we don't have any real fund buying that will come in from funds until probably the earliest would be Monday afternoon. So I'm thinking that if we're going to crack out here, we've got a couple of good days to do it before it comes out. And again, second biggest IPO of the year after Alibaba, going to suck some more money out of it, along with 14 other IPOs. I think a couple of those have all already been retracted. But the constant march of the IPO money is going to be sucking money out of these stocks that are in the indexes, causing even more selling. So I'm not real bullish. In fact, I'm bearish at the moment. We will be back in a minute. Give me a call, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Just seeing if there was anything really moving out here. And we said we'd get into earnings. BBBY, not Best Buy, it is Bed Bath & Beyond. Caught a few people, probably a few shorts out here napping. They've had so many big big disappointments out here, but certainly a stock that looks like it's setting up for a 3-gap play. I think we're going to get one more, and it may be 3 months down the line or something, but certainly caught a few people, and now we're gapping back up, trying to fill that gap. That gap last happened on April the 10th, came down with 12 million shares. What do we got here today? 3.7 million shares so far today. So this is one that you'd want to be looking at. If this thing does tend to kind of flare out and not get the kind of volume it needs this afternoon to fill this gap on higher volume, then you can look at this as the final and probably big move to close this gap. But I'm thinking that we will have one more gap big gap down for the 3-gap play. Normally you don't get these gaps filled. They get partially filled. But I'd be wanting to watch that. But I think so many people were short this since the last few horrible reports that certainly you have to look at this as maybe just catching a few people off to the side that they didn't have yet another horrible report. We see a lot of retailers this way. They've been just hammered down unbelievably. Now, what we do have is the June 26th low at $54.96. And, of course, about the highest volume of the move down here with 19 million shares. You know that's going to get tested. Probably 92% chance that gets tested in the next 3 to 6 months. So you've got to be saying that if you want to go long this thing, the only safe play is to wait for it to test out there. Another play would, of course, be to short this thing if you can't get the kind of volume you want. And, you'd be short, probably short this thing and maybe... if it can, it's probably going to fill this gap or most of it. So maybe you've got another 50 cents to the upside on this, and you wouldn't have to put your stop much higher. But you would have to sit on this one for a while. My guess is you're going to have 2 or 3 days while they squeeze the shorts out of this one, and you're going to be moving back. Now, there are a lot of stocks out here that are giving some fairly decent signals or getting close, and I wanted to watch them. Caterpillar certainly has come down with a higher volume. Of course, a lot of these miners have not been buying equipment because, of course, the price of gold continues to pretty much go down. I think it's up a couple bucks today, but it won't matter if gold goes sideways. If gold stays at $12.25, a lot of these miners are going to be out of business. They bought up mines with gold at $1,800. And they're just not going to make it with the cost of production at $1,000 or $1,100 or $1,200 on a particular mine. They are also pretty horribly managed, and you can look probably for them trying to raise additional cash over the next, probably not this quarter, but next quarter, if they don't see a severe increase in the price of gold. And maybe if you saw that, maybe you saw the price of steel starting to firm up a lot better. Maybe you could be a little bit more bullish on Caterpillar. But right now it's down. It came down with significant volume. It has not really busted this August 1st low out here, but I am watching it over the next couple of days. Now, it may take some time to go sideways to build some energy and break down that low, but I think we are going to go below that $99.11 low. If it goes down with light volume and then pops back in the trading range, could be good. I would not be long with it because of the energy to the downside. This thing is going to have to consolidate, and I would say a month or two, even if you do have a light volume. It's going to take a little while to get the Momo back in Caterpillar. And we'll look at that. Other things, CCJ, the industry that's always kind of interested me. You would think with all the new reactors coming online for uranium, this thing would have been doing a lot better. Certainly back down here at those lows, if you're thinking that this thing has a story, it is. High volume high out here on March 13th, $25.84. 5.1 million shares, so you have a good chance at that. And that'd be a $7 run on an $18 stock. Not bad if you could get it. Probably would take a few months. It's not going to be overnight. But looks like at least you might have the startings of this starting to bottom again. My guess is that if this light volume holds down here, I think what we have 2.4 million shares yesterday. That's comparing to the low on June 6th that got to 1849 with 4 million shares. And of course, when this gapped up, that started that gap with 4.6 million shares. So pretty good support level on CCJ out here. So you probably want to keep an eye on these stocks at support. If they start looking like they're going to get some juice, maybe the market will too. If they don't, and they don't move, you want to see those things move fairly quickly. And at this point, I am not in the camp thinking that will happen. But if I am wrong, I'll be willing to stop on a dime. Unfortunately, it would be in somebody's pocket at the time. but it would be interesting to buy on XES. XES. Again, you can also email me at path@tfnn.com. I'll be more than willing to look at your stock here this morning. And, of course, give me a call at 877-927-6648. Spider Series Trust. Man. I don't like it. I think it busts this low down here at 39.54. Question is there a buy point on XES? And I'm in a bear camp now. Energy is pretty good down here in these back legs. The real thing out here is going to be what would you say? Yeah. This is going to be this... this is what I disliked. It really made me think that we've got something going on here, and that is this light volume move from August 7th back up to September 2nd. Of course, made a nice little ABC. Let's take a look at the expansion numbers on that real quick. To see, that would be our A point, and 43.68 would be our B point. And our C point 54. C point. So that sets up 39.83 as just the one-to-one ABC down. But we've got projections for 37.56, 36.86, and 36.15 out here. And it gives every indication to me with this high volume intraday move back here that you're probably going to get an extension on this move. So I would watch it very closely. I don't think there's anything else out there. I'm thinking there's something else going on here. I don't know if it's Bill Gross and BIMCO, if it is some other country that's going to have problems, a bank that's going to go belly up, but it certainly looks like between the selling to raise cash for these IPOs, the market's under considerable strain at the moment. That does not mean we will be lower at the close today, just that the surprises will continue to the downside. And as far as I can tell, that's what's happened so far today. Now, some of the other ones out here, like the transportation stocks, have already come off. And when we look at them, they are just now getting into support. And while we're probably going to find some support here in sector rotation for a little bit, but my guess is that that won't last for more than a couple of days. If you're looking at transportation companies, J.B. Hunt, JBHT, not a bad looking chart out here. Again, if I'm wrong, this will be some of the charts I'm looking at. You had a nice gap up with a 2.4 million shares on April the 14th. That pretty much has set the gap that has been support in J.B. Hunt Transportation. Old Bucky and the rest of the Hunt brothers out there. July 15th, it tried to come back in with 2.1 million shares, 72.94. We've gotten below that today on just 560,000 shares so far. So a few of these things do look like they're going to set up, and maybe lower fuel prices will offset less shipping out here, but we shall see. Now, one of the things that I've always noticed is that if you're going to want to short a great deal of the stocks in the financial area, broker dealers like J.P. Morgan, Goldman Sachs, you better find all of them giving a signal. And I'm starting to see more than a few of these things with fairly decent signals up here. Now, J.P. Morgan probably one of the weakest out here, especially if you look at my power law vector indicator. And that is, we haven't, we've kind of gone over it. We've closed back below it. It's kind of going out sideways. What you really have to dislike is that the energy is never really fired back up in this last leg. And we have a valid test of the March 25th high at 61.48 that had 35 million shares. with the September 19th high out here at 18 million shares. And again, this hasn't gone away. I'm trying to remember when earnings are. And we'll take a quick look. October the 14th. So could these hang out for another couple of weeks and at least buoy the market a little bit? It could. But when we start seeing more than one of these stocks, the last time I saw all these stocks up here at highs with very light volume like this was the March 5th date back there in 2008 when everything blew apart. And if you go back and look at the charts out there, find all these broker-dealers, every single one of them looked sad. Now, it would be one thing if we found one of them. But here's Raymond James, okay? You had a couple of highs in the 56 area, one on January 23rd and the other one on April 1st, both of those, 1.5 million shares approximately. And you got into it on April 18th. This thing is already back down and back in it. So now we've got JP Morgan, now we've got Raymond James, and guess what we have also? That is a Goldman Sachs so far, looking like it is a false breakout, looking like we've had the proverbial reversal day. It did close lower. My guess is these things are not going to be blown out, but you needed to have about 2.9 million shares as we went back up through this level. And, you had 3.3 kind of as you got to it, but then 2.3, 2.1, 2.8. You had 3.5 and then a reversal the next day with a 5.4 million on the shares down. So none of these are looking good up here. Some people have called and asked about shorting these. And, of course, I've always thought that there were greener pastures. Besides shorting a company that has its own trading floor, can manipulate its own stock. Too many times, even when these stocks are incredibly weak, you get something out of the left field from them, and they run all the shorts once again. They're pretty good at selling their own shares back to shorters, and I've always shied away from them, in fact, since they have a deliberate edge over every other stock out there in the fact that they have their own trading floor to manipulate their own stock. But that's it. It is what it is. But as we look at these broker-dealers, more than one or two of them, and like I said last time that happened, go back to look at May 5th. Is that 2007 or 8? I can't even remember anymore. Wow. Okay, other stocks of interest out here. We talked about the housing stocks, looked at Toll Brothers a little. We want to be watching the volume on this one. Of course, so far, not a huge amount of volume. It has broken the August 7th low. You're going to need 3.4 million shares. My guess is that it's going to be kind of tough to get that volume today. Does not mean that we won't go sideways for a few days until we get some kind of surprise and finally start seeing these stocks do start to blow out to the downside. It has a fairly decent looking ABC structure out here, and when you look at that, what was that, 37, 39, you can say that this thing is completing a 1.168 down here at 31.55. So what, about a nickel lower than, 7 cents lower than we were today. And that would have been an ABC back in the structure. But to me, the one I'm looking at now is going to be this one, which is the start of, what is that, June 2nd. I'm going to complete this while we're going to the front and checking out our contest for Thin Grand. Give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Anyway, as we come back here, it is a... we were looking at Toll Brothers and the ABC down. Before we get into that, I do want to remind you one more time that you've got, 25 hours. Tick, tock, tick, tock. It's going to be a tough day out here, and that is you only have 25 hours to get into a contest of stock trading and market trading with no risk. That almost never happens. And probably one thing better than trading with actual cash to get the real feel of it is trading with other people's cash to get the real feel of it. And an excellent opportunity for you to get involved and see how the whole Nadex thing works. Anyway, check that out on the front page of TFNN.com. Less than 25 hours left to go. Tick-tock. Anyway, we'll be looking at the rest of the market out here. Gold's now off $1. I'm still in the camp that wants a huge washout before I get involved on this thing. And even then, you're going to have to not only have a decent washout if you're going to want to buy these miners, but you're going to have a rather quick pop back up into profitability. And I think that means probably around $1,400. These guys are going to have to be able to dig and continue digging and be able to make at least a few $100 an ounce. Right now, doesn't seem probably worth it at probably $1,200 and some odd bucks an ounce. If it costs you $1,100 to get it out of the ground, you'd be better off running a supermarket. And that's kind of tough, but I think a lot of these guys probably won't be able to make it more than a few quarters with now again coming to market and selling even more shares. We were looking at Toll Brothers, and it continues to be, for what it looks like, a nice little move out here. You wanted 3.4 million shares as it broke the B point. You got 2.3 million shares. Again, this is not going to be one of the weakest sectors out there. I think there are some better ones out here. But I think you could see this thing move sideways and then probably also see some more movement to the downside. But it's probably going to take the market cracking to get these to complete a lot of these ABCs. Of course, the one I'm looking at here takes you to $30.66. That's not much farther down. That could just take a day or two in a bad market, and you would complete at least the 1-to-1 ABC down in Toll Brothers. So maybe like some of these others that we showed here today, they're at least starting to come into some level of support. We did JP Morgan, Coors, Michael Coors. Let's take a quick look at this one. This one's kind of coming down into the support areas too, and so far fairly light volume. You had a low of February 3rd with 8.7 million shares at 76.15. We're way below that. That got blown away on the August 4th low at 21 million shares, and that should have been acting as support for Coors. You have two gaps down here also at about $72 and at about 68 in some of these retailers, and could you pop back up in the $75.13 range for Michael Coors? You could, and you might have a trade up to 85.5. That high volume gap down on the 5th of September going to be a tough row to hoe, as they said in the farm business. But probably some stocks out there with some better risk reward. What you really have to dislike is the huge energy from this August 20th high, which would say at best you're going to do some sideways consolidation. And we may need a month or two, even if you are bullish out here on some of these stocks, to get them to come out. Anyway, sell when you can, not when you have to. We'll see you at the 2 o'clock hour today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.